This is tax filing time. You started to work on your returns. Mark Lamkin's going to try to save you some grief this morning. He's here with the 5 common tax mistakes people make, things you need to be really careful about so you don't get flagged for an audit.
First of all, 18,500. That's the number of pages in the tax code. So mistakes can happen easy. H&R Block says over $1 billion a year is lost through mistakes. And the IRS has $760 million just sitting there waiting to be claimed. So we're going to show you how to get that.
Okay. So first point.
First one, math mistakes. This is the most common, easily preventable mistakes. It delays those returns or may not get it processed at all. But here's the kicker. If you make this mistake and it's to the bad or where you owe the IRS money, you can cut your refund up to half. Those penalties and interest can be as much as 50% of that. So you got to be really careful there. TurboTax, TaxSlayer, use an online system that'll do it.
That's what I do. It does the math for you.
Right, no math mistakes.
You don't have to go back and make sure that you've gotten it right.
The #1 mistake, and it prevents it.
Okay. Second is unearned income. Forgetting about it.
Right, so when you have the job, you've had the W-2, so you're going to get that W-2 at the end of the year. But think about this. If you have, let's say you're lucky enough to have gambling winnings, or you have someone forgave some debt, or you went and worked for somebody on the side for cash. If they turned in the 1099, that goes to the IRS. The IRS knows you get that. Second biggest mistake, people forget about extra income, and again, you're right back to that penalty issue.
Yeah, then you go back and you have to pay even more.
That's right.
Third point is home office deductions. Sounds like a great idea. You say it doesn't really add up to much?
Biggest red flag of audits. So unless you're using this and using it, using your home a lot for business, I don't even want you to go down that path.
Don't try to write off your laptop if your kids are doing their homework on it.
Don't do it. Now, here's a caveat. There is a new home office deduction, and they allow you up to 300 square feet. It's only $1,500. That's not going to be really auditable, if you will. So if you use that home office a lot, I'm going to tell you, just take that small deduction and move on. It's not worth the headache that it could cost for that little bit extra of refund.
Charitable errors, how do we make those?
Well, you get up to $250 that you can have without written proof. Now, the IRS, audit-wise, if you look at kind of the triggers, if you have big charitable deductions, you better have great proof. The other thing I'll say is look the last 2 or 3 years, look at how much charity you've given in the past. It'll give you an idea because if a year jumps out, it's going to cause audit. Last thing I'll say, most people make the mistake of giving money. Here's what I'm going to tell you. If you have an appreciated asset, like if you have a stock that you put in $2,000 or $3,000 and it's worth $6,000 or $7,000, give that stock instead of money. You don't have to pay those capital gains. The charity gets the same amount. It's a win-win.
Oh, okay. And finally, mortgage mistakes.
A lot of refinancing going on right now still. I'll say this, everybody gets that interest that they get to write off up to $1 million on that mortgage, but a lot of times they forget about the points that they pay on that mortgage and their real estate taxes from last year. Because usually those are built into those payments, so you don't think about that, right? So you get that interest, but you have to go a step further. If you refinance this year or barter sold this year, you get to write off those taxes and points. That could be thousands of dollars of refund. Don't miss it.
Okay. Some of the mistakes could cost you. Some could put more money in your pocket.
You got it.
Thank you, Mark. And he has offices across Louisville can help you out with your financial planning.